I am losing my voice today, but I'm committed to make this video because I'll be talking about three things ultimately. Number one, I'll be talking about my XFA progress on my 5 top step funded accounts. Number two, I'll maybe discussing my payout, which I just requested a couple minutes ago. And number three, I'm going to be discussing a general guideline or rule book that all of you can implement to prevent your accounts from being blown and from surviving drawdown periods and kind of making it to the more profitable trading days. With point number one, I did start 5 XFA accounts roughly 2 to 3 weeks ago, and here's the current progress. This is my oldest one, which is slightly $2,000 higher than the rest of them, but you can see here from Feb the 8th till now, it's a general equity gift to the upside. I had some really nice winning days. I had some pretty brutal losing days. Again, it doesn't seem like a lot, but it definitely did impact my psyche for a couple of days, but I'll talk about that after. And all in all, when it comes to my actual trading performance, you can see my win rate, it did suffer since last week. I dipped from 51% to 42%, and my average win to loss is roughly 2 to 1. Hence, you can see, even though I'm wrong more than 50% of the time now, my general equity curve is still going to the upside. So all in all, that's where I'm currently at. You can see here Wendy's messaging me. I was asking her some questions about payout. But talking about payouts, today's March 2nd. I did request 5 more payouts, all of them just under 2K. And, ultimately, if you're not familiar with the overall top step payout, it's you submit it within a couple of minutes, your funding gets approved. They remove the funds from your accounts, which is nice because it's all instant. The risk gets approved a couple minutes later. Then it goes through compliance approval. It goes through financial processing, and then the funds get sent. And usually this happens between 1 to 3 days. I've seen funds hit my bank account the same day, and sometimes it takes a bit longer. It really depends on, I guess, their back-end processing systems. But all in all, you can see here below me, this is the actual amounts I've requested with the payout amounts that I've gotten after the profit splits, which I'm not too crazy about. I think Apex right now dropped 0% profit splits, so they hold back nothing, which is great. But all in all, I feel like that might be the next firm that I'm going with. But again, this is very superficial. It's just 11 days of hard work, which just netted just under $10,000 USD. I do want to dive into topic 3 here quickly because I think it's the most important. It's how to maintain the equity curves that I just showed you a couple of minutes ago. So let's dive right into it to talk about the 3 main points I think that should help positive equity curve creation and really prevent mass drop-offs and blown accounts. So point 1 here is when it comes to trading your accounts, I think it's very important that you structure your risk. So for example, for a 50K account, we have 2K in drawdown, which really means you shouldn't be trading more than $200 per trade. I think this is a really good amount, assuming that you lose 10 trades in a row, you blow your accounts. I think that's when you should blow your account. Not that it should get there, but I think it's a really good amount between the cost of the evaluation versus how much you're risking, how much you can make. Below that, I don't think it really makes sense. And above that, I think you're really risking it because even if you have a 50% strike rate, assuming you get 4 trades in a row, you blow at $500 per trade. So manage your risk, break down your account into 10 bite-sized chunks and manage that from a trade perspective. Number 2, managing drawdown. Okay. So trade size should be $200 for a 50K account. Point number 2, drawdown. When it comes to drawdown, I think it's important that we manage it correctly. This is the final boss of trading. It's either you make it or you break it. And a lot of the breaking happens around drawdown because it mentally impacts your psyche, a lot of aspects on your trading. But all in all, these are my rules that I use. So rule number 1, when it comes to trading, I trade with 1 R. If I take 2 losses in a row, I drop down to 50% risk. If you take 2 more losses in a row, drop down to 25% risk. What this is going to do is it's going to really prevent really deep drawdowns in your account, and it's going to allow for positive equity curves within your trading. So it's going to take you longer to get out of drawdown, but it's going to save your accounts. So save on fees, save on a lot of things, save on mental stress. It's a really good kind of structure to managing your drawdown. And the same thing happens on the inverse. If you have 2 winning trades at 25% risk, why double to half a risk? And then once you're fully out of drawdown, you're back into trading a full risk for every single trade. Then point number three, I would say is usually if you take 2 losses in a row, close out the session, close out the season, come back, trade the afternoon. If not, trade the next day. That emotional state is going to impact you, and just lock out after 2 losing trades. Okay. So if you do implement these 3 key concepts in your trading and your risk management, I think you should see your accounts stabilizing a bit more, seeing possibly higher equity curves, and ultimately, just bringing more profits because you're not so stressed, you're not paying that many activation fees or whatnot, and everything is a lot better. So without further ado, guys, hopefully you guys learned something here. If you did, feel free to drop a like, and I'll catch you guys in the next update. Talk soon, guys. Take care and safe trading.